Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 7th of September. In the States, a technology-inspired sell-off towards the end of the week was probably little more than a bout of healthy profit-taking. Admittedly, there are some economic data coming through which suggest that perhaps the economic recovery in the States is coming to something of a stutter after the initial rebound. But that being said, the fact that there was not a spectacular rush for haven assets despite that weakness in the market would suggest that this is something that had perhaps been overdue on valuation grounds. That's not to say that it's particularly derailed the performance of the markets. In the year to date, the Dow Jones is currently down just 0.9%. The S&P 500 in the year to date is now up 7%. Even after that recent weakness, the Nasdaq remains up 28%. And again, the FTSE 100 in the UK is the laggard, being down 22% in the year to date. Looking ahead to next week, we've got three blue chip FTSE 100 companies reporting, each with slightly different stories. The first one is Associated British Food. This, of course, is where all eyes will turn to Primark, which is responsible for something like 2/3 of the overall group's operating profits. Of course, if we cast our minds back, Primark has told us that the store closures as a result of the pandemic lockdown were costing it something like £650 million a month, although when we last heard from them in July, the reopening of stores had been, in their words, reassuring and encouraging. So obviously that current drain has now evaporated, and it'll be interesting to see how the shares have performed. They've still got some way to go. They're down 22% in the year to date. Next is JD Sports. This is another retailer, of course, where we've seen a 15% decline in the year to date, although admittedly they're up over 140% since their March lows. Slightly different in as much as they're trying to dip their toe in the US market with the acquisition of a company there called Finish Line. 26% of their overall revenues now come from the States, similar to the figure for Europe, with around 42% coming from the UK. Finally, William Morrison's supermarket, down about 4.5% in the year to date. It's not been an automatic slam dunk for the supermarkets given the pandemic, because obviously they've had higher associated costs. That being said, William Morrison's in fairly good shape in terms of its overall financial picture. It's also got tie-ups which we would expect to hear updates from with the likes of Amazon Prime now and also McCall's. And of course it's also one of those companies still paying a dividend. It might have scrapped the special dividend for now, but the ordinary dividend remained intact, with the shares yielding somewhere around 3.5%. Thank you for watching. Have a great week.